Okay, so we have a lot to cover in this month's recap. Apple has announced a high-yield savings account paying 10 times the average. Revolut have announced some new features and also had their valuation reduced by almost half. Chip and Wise have both increased their rates again. I also want to share with you a new provider in the UK that has quite the compelling cashback offer and a name I'm struggling to pronounce. And I'll end the video by sharing with you some of the best savings rates on the market right now. But first, let's take a bite of the apple. So Apple now has a savings account that has a very competitive rate of 4.15%. Anyone with an Apple card can earn that amount of interest on both cashback and deposits made from a linked bank account. The savings account is from Goldman Sachs and there's no fees, no minimum balance, and you can earn interest on deposits up to $250,000. So what does this mean for banking, and will Apple do the unthinkable and launch their own bank? And also, why is a company that makes most of its money selling devices even getting into banking? Well, to answer those questions, we have to consider just how much potential Apple has to disrupt this industry, because their reach goes well beyond that of any bank. Even behemoth legacy banks like HSBC and Bank of America don't have the same reach. We touch our smartphones something like 2,500 times a day, but we're not opening our banking apps that much, and nor do we visit physical bank branches that much. So there lies an opportunity. Not only that, but most Apple users have far greater faith or trust in the company comparatively to how most people feel about their banks. And this was really brought on by the 07-08 recession, but also exacerbated by the recent demise of Silicon Valley Bank and Credit Suisse, which also makes you question the timing of the launch of this account. Just as banks announce a loss of $60 billion in deposits, in comes Apple with their robust balance sheet offering a high-yield savings account.
Terrific.
And they're a lot more robust than a typical bank. Banks essentially do business with borrowed money or debt. So if you and I and thousands of others suddenly decide to pull our money out of a bank, they can end up with a meltdown like SVB. Apple, on the other hand, are so cash rich that this just won't be a problem for them. They have something like $60 billion in cash and $100 billion in marketable securities that they could just sell or liquidate as cash. And if Apple Bank was a thing and there was a run on deposits, so people started pulling their money out, they wouldn't break a sweat. But if they were an actual bank, would you open an account? Like, do you trust them with your money? I'd love to say that there's no way Tim Cook is getting more of mine, as I'm already uncomfortable enough with how embedded I am in their Mac iPhone ecosystem. But if they launch an Apple card in the UK that has, say, 2% cashback and a high-yield savings account, almost in a similar way to JP Morgan Chase, it'll be hard to say no to that. So every month appears to be a busy month for Revolut, and April was definitely not an exception. They've launched joint accounts in the EEA, which sadly doesn't include the UK. You and someone else can now open one of these accounts, and you just have to live in the same country. Unfortunately, I can't test this, but as far as I can tell, it would just be like sharing a Revolut account with someone else, and I don't think you'll be unlocking any different or unique features. And all of that comes at the same time Revolut have had their valuation slashed by $15 billion. This also means that they're no longer worth more than NatWest, which was fun while it lasted. This whole devaluation also, in my opinion, sounds a lot worse than it is. Ultimately, Revolut is still valued at $18 billion, which in today's economic climate is really impressive. And you just have to draw a comparison with Klarna, another financial tech business whose value last year diminished by 85%. So it could be a lot worse. Now, the Times originally reported on this. Basically, Schroders, a company with a stake in Revolut, have cut their valuation of said stake by 50%. But they didn't just do this to Revolut, they also cut their valuation of Atom Bank. Revolut's response to the Times was to say they do not engage in speculation on their valuation, and they continue to perform strongly in all markets, as well as reporting profitability for the first time. I, for one, do hope Revolut continues to perform well, but this may unfortunately impact the amount of money they're able to raise, which could be necessary in the near future. Although Nikolai Staronsky, their co-founder and CEO, did say in an interview that they didn't really need to raise more money unless they were to expand faster and apply for banking licenses in more countries. So expansions into areas like New Zealand, India, Brazil, Mexico, these countries may be impacted by this. Hopefully it won't, and also hopefully it won't impact their UK banking license application, which should be any day now. Let's Let's talk about a new provider in the UK that has a rather compelling cashback offer. And I'm not talking about the type of cashback you activate in like a clunky app that's specific to just one business or vendor. I'm talking about cashback on everyday spending. Chase UK used this to win our hearts and attention. They offered 1% and in doing so scored around £10 billion in deposits in just 18 months. Well, now there's a new kid on the block that's maybe trying to grab our attention in a similar way. Algbra or Algebra. I'm not sure about this one, but I think it may be a play on the word algebra. I have no idea. Maybe someone can help me with that in the comments. Anyway, this provider, and I say provider because they're not yet a licensed bank, so there's no FSCS protection, are built according to their website on ethical principles, and their approach is to put people and the planet first. They're offering 1.5% cashback on all purchases made with Google or Apple Pay, and 1% on everyday spending using their card. According to their terms and conditions, cashback earned with everyday spending is limited to only £10 per month. It doesn't say anything about the 1.5% you can earn, but let's assume that's also £10 per month. So it's obviously not as good as Chase UK's original offer of 1% unlimited cashback each month on everyday spending, but that is coming to an end and being capped at £15 per month. And while that's £5 more of cashback you could potentially earn, JP Morgan Chase don't exactly have the greatest track record when it comes to ethics and putting the planet first, or people for that matter. So I could see why someone that's aware and concerned by this may concede £5 per month and switch to a provider like Algbra. They also have a carbon tracking feature, which apparently measures your carbon impact. I've never seen anything like that, and this does look like a very interesting account. So I'll definitely be reviewing it next month. And if you'd like to see that, then make sure you hit subscribe. Last month, I spoke about Wise and their interest earning account, which at the time was at 3.66%. That is now 3.81%, and it may continue to rise because it is essentially pegged to the Bank of England's base rate. And with the bank meeting next month and inflation unfortunately remaining sticky, it is possible that rates may rise again, and this Wise interest rate could surpass 4%. Now, that's by no means the highest or the best interest rate you can find. There are, for example, fixed term savings accounts that are already over 4%, but right now, with interest rates constantly changing, it's probably not advantageous to lock away your money for long periods of time. This isn't a concern with the Wise account because it's essentially easy access. There's no minimum term or penalty for withdrawing, and you can access up to 97% of your money at any time. There are some small fees associated with the account, but if you can stomach those, then this really is a compelling proposition. Especially because the next closest account in the UK is Chip at 3.55%, which also did recently increase from 3.4%. Okay, sorry to interrupt the video. Wise literally just announced that US customers can now earn 3.92% on USD balances. And that's just like the British pound Wise account that I was talking about earlier. There's no fee for withdrawing your money early. There's no deposit required. There are some fees associated. I'll try to share those with you, but otherwise it's easy access. So you can deposit your money, it can earn 3.92%, and you can access up to 97% of it at any time. That's my doorbell. I've got to go. Back to the video. It is still shocking and, in my opinion, criminal how most banks are refusing to pass on higher savings rates to their customers. The Telegraph reported on this and basically named and shamed banks like Barclays, Lloyds, NatWest, and HSBC, whose rates are honestly pathetic. But they also highlighted digital banks like Wise, Monzo, and Chip, who are actually passing on decent rates to their customers. The biggest culprit of the month has to be Virgin's Everyday Saver account, which is 0.25%. And it even says super smart savings. I'd say that's about as smart as a loaf of bread, and that you'd be better off depositing your money into a mine shaft. But I'm not a financial advisor, so none of this video should be taken as that. Here are some other savings accounts and generally just interesting accounts that you may find compelling. And I've put links for some of the providers I've discussed today in the description box below. So if you'd like to sign up for any of these providers, please use those links as you'll be supporting myself and the channel. Hope you enjoyed this month's recap. Let me know in the comments if you have any questions, and I'll see you in the next video. Goodbye.